It's Friday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up we have Andrew Cox back with us. He's going to give us a DHL supply chain pricing power index update. But first, we're going to go to Zach Strickland with Carrier Update, brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Carrier Update presented by PowerFleet. I'm Zach Strickland. Looking at our tender rejection index for the United States right now, the rate at which carriers are rejecting their electronic tenders from their shippers, 25.82%, a huge dip 2 days ago as the tender rejection rate fell from just under 28% all the way back down to about 26%. Now, it is not obviously a momentous plummet or drop from where what we would anticipate would be significant loosening in the freight market by any means, but we are coming out of that holiday, and some of the significant aspects of this, I believe, are the fact that we do appear to have somewhat of a ceiling on tender rejection rates. We had obviously supply side contraction over the holiday, a lot of drivers coming off the road, et cetera. Normally we have a pretty big jump. Last year we went all the way up to about 14% around Christmas, as everybody was taking vacations, and that was from an average of about 5 or 6%. This year we only climbed a few percentage points, up to 28%, which we were hovering right around that 26% range before the holiday. So that to me implies that the supply side contraction wasn't enough to really, significantly impact the freight market as we would normally see this time of year. Again, looking forward to Christmas, it probably means that we won't see a 30% tender rejection rate, but I would imagine we're still going to hover between this 24 to 28% range as we move closer to another supply side contraction when people will take more vacation around the Christmas holiday versus Thanksgiving. This one might have been impacted by the fact that people did not want to interact as much this Thanksgiving, so they just stayed on the road. But going into Christmas, people will more than likely take that one more seriously than they do Thanksgiving in terms of vacation. So we will see on that end. Looking at our weighted rejection index, outbound tender market share, combined with the weekly change in the tender rejection rate, the significant thing to take away from this, look at all those red dots. That's all of our biggest markets in the United States right there, and they're all seeing significant drops in tender rejection rate. So any carriers out there on the spot market looking to find freight on the spot market in some of your larger market areas, these are going to be these areas where a lot of people have domiciles around. So a lot of capacity returning this week. A lot of people getting back on the road after spending some time at the home. And it is having a tremendous effect to the larger markets, specifically in the United States. Now, if you look around, there's still some pretty big or darker, orangey colors sitting around there. Not a lot of blue on the map today, indicating we're not seeing a lot of significant changes or upward pressure on spot rates or increased activity on the spot market in some of these areas. Stockton, California is one of those in blue right now. So that's an interesting little black haul market that you might be able to get a little bit more for your time and effort if you have some origin freight coming out of there. But the big picture here, big story here is that simply the largest markets are all sitting down here in this bottom right quadrant of our weighted rejection index heat map. Breaking down these markets, you can see out Atlanta, Joliet, Dallas, Harrisburg there in yellow still has a tender rejection rate above 30%, but they're all coming down. All of our largest markets, I've got our outbound tender market share chart up here for anything greater than 1% of the overall market. You see Atlanta, Ontario, Harrisburg, Los Angeles, Indianapolis, all sitting right up here in the top left. That's an indication they are the largest markets in the country. Atlanta has 3.97% of the overall outbound freight. Ontario still number one at 4.5% of the overall freight volume. Now, Ontario, of course, one of our largest markets in the country. We've been talking about it all year long. A lot of import, a lot of freight coming out of that area, and it has made a significant disruption to the freight market across the country. Los Angeles, very difficult to get back into in terms of there's more outbound than inbound going into that area, so you have to reposition your trucks very carefully to get back over there. Looking at our lead times, you can see that they're falling out of Ontario. Tender rejection rates dropping as well. You see the lead times and tender rejections also very closely tied together. We do think that we've probably bottomed out for the time being, as we're probably going to just have this slow kind of contraction here over the next little bit. Looking at customs and import demand, still elevated year over year. So anybody operating out there in Los Angeles, stay tuned for more freight. Thanks for this. That'll do it for today's Carrier.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to the DHL Supply Chain Pricing Power Index update. I'm back here with Andrew Cox. Andrew, what's the latest?
Anthony, it stayed steady at 85 this week. We know that carriers are in dominant pricing power position. If you want to look at spot rates or you look at tender rejections, there's a lot of signs that prove and point to that the carriers are in a great position. And the same goes for volumes. I mean, their volumes are strong right now. We know that the holiday spending, we look at the Black Friday and Cyber Monday, while in-store traffic was way down, something like 52% on Black Friday. We saw Black Friday and Cyber Monday respectively become the number 3 and number 1 highest spending days online in American history. So very strong consumer spending moving into the holiday season. That gives me some confidence.
Got it. And so you just mentioned Black Friday, Cyber Monday. Do you think we're going to lose momentum as we get closer to that December 25th mark?
There's certainly people calling for that. UBS analyst Jay Soul said, especially in the soft lines, things like apparel and not the hard line things like big TVs and big purchase items, but some of the softer lines, we could see a fall in demand post Black Friday into the holiday season. I don't know if that's going to be the case so much. I do think that the spending has been spread out over the holiday season a lot this year, and necessarily I don't think we should look at the weak Black Friday in-store sales as a measure for the overall holiday season. But let's take a look at volumes here. Since our outbound tender volume index is a 7-day moving average, it becomes a little bit worthless to do week-over-week comparisons after a holiday season, after a holiday like Thanksgiving. So here we are still in that trough, making its way back. The one thing we can do is measure the depth of the drop, which is slightly shallower than in previous years. So that just it gives me confidence that I do think volumes are going to snap back pretty strong once this thing normalizes. And there's some other data there that points to that as well. If we look at off the West Coast, there's at least 15 ships anchored off of the Port of LA and Port of Long Beach. So there's a lot of freight sitting out there that's going to be moving into the country here in the next couple weeks.
Got it. And with these volumes so far up and still at these all-time highs, even after coming off a trough, what does this do for capacity? Yeah,
well, capacity remains really tight. As Zach said, we saw a meaningful drop after Black Friday. I think Black Friday was the all-time high again. It was like 28.5 on the outbound tender reject index. We've seen a full 3-point drop since then, but again, it's still at nearly 26%. So carriers are still rejecting 1 in 4 loads across the country, electronically tendered loads across the country. So it's nothing meaningful in my mind. I still think capacity is going to be really tight through the end of the year. I think we see more of the same and nothing really transformative on the capacity side.
And any kind of change we're seeing in different modes?
Yeah, so reefer is much tighter, and this is a time where reefer demand becomes, there is some excess demand in reefer. Things like paints and things like canned goods now have to go on reefer trucks. So we're seeing really high demand there. Again, that's fallen more since Black Friday, but it's still at nearly 50%, so nearly 1 in 2 loads across the country, reefer loads, are being rejected right now. And that's just putting, this is the truck stop van rate per mile. It's putting a lot of pressure on spot rates. This is, of our 100 lanes, only 19 of them were negative week over week. You see a lot of green on this chart. And the vast majority of those 19 were coming out of LA or coming out of Chicago, 2 very hot freight markets.
Got it. And any expectations for how this is going to play out for the DHL Supply Chain Pricing Power Index moving forward?
Yeah, I mean, I'm expecting the carriers to stay in really strong position moving into the holiday season. As Zach said, or moving throughout the holiday season, rather. As Zach said, you're going to have some more supply side constraints as drivers try to get closer to their home bases or reject loads that take them away from their home base. So you're going to see more upward pressure on the outbound tender reject index and subsequently on rates as well. This is just the truck stop van rate per mile. Again, we've cracked $3 per mile for the first time all year. We've been kind of teetering right under that line, but this is the first time we've had the push above it. Rates are now up 23% year over year, so really strong. The comps get easier from here, actually, so we might even see further expansion between that year over year comp.
Got it. Andrew, thank you so much for that update, and thank you so much for tuning in. That's going to do it for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. That's going to wrap it up for this Friday edition of FreightWaves Now. Thank you so much for tuning in. As always, you can check out all of our content on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.